Today's topic, timing the bond market's meltdown. Is the UK bonds or the gilts the culprit that trigger the global bond market's meltdown we're seeing today? Not exactly. In fact, in April this year, there were clear signals that the global bond markets were already in trouble, and we're going to discuss that today. And for today's content, there are two parts. The first part, why we should not blame it on the UK bonds. Then who? And number two, we're going to discuss about how to overcome this global bond crisis. But before that, disclaimer. So please take some time to read into the disclaimer down here. And let's go to the first part here, why we should not blame it on the UK bonds. And let's look at this on the left side. And in fact, from the recent all-time high, which is this year, and to recent all-time low, the US bonds or the T-bonds that we're seeing here has already down 36%. Now let's cross over to look at the UK bonds here. And similarly on the recent all-time high, which is not too far away, to the recent all-time low, it is down 35%. Now, in fact, the global bonds market were already in stress. No, it's not the UK that caused the trigger, but there were already a lot of undercurrent then. Now, let's look at this article that I have published about 4 months back. Now, I say that, let me just look for that. And so it was published on the 8th of July. And then we saw that I have drawn this trend line up here. They could see that over the last 30 years that the T-bonds, and not just the T-bonds, but overall, all the global bonds market has been on a very nice 30 to 40 years uptrend. But we could see that in April this year, 2022, there was a clear break below, and it closed below this nice uptrend line. Never happened before, but it closed below that. And then the article I've written here was that I say that there was a convincing break below the trend in the month of April. And then I expect the market to do a short rebound and the market to continue to sell off. That we have entered from a 40 years of uptrend and we have transit to a downtrend. And that's what I have analyzed. Now we're going to study into a little bit deeper into what we have analyzed. And if you've been following over my past videos that we discussed about how to plot an uptrend line and also a downtrend line, basically they're the same. But the two rules is this. Now, the first rule is that we have in this uptrend line that we have to find at least 3 significant troughs, if not more. Then after we have identified all these significant troughs, we try to find the best fit. Now, then what we have did was this. First, we have to find a point and we connect the dots and we try to find the best fit. And that's rule number 2 here. That I think I'm quite satisfied with this uptrend line. Basically, we could see that there was 1, 2, 3, 4, in fact, many trough, and we have tried to find the best fit, and this was a very perfect more than 30 years uptrend. And that's what we have seen in April this year, 2022, that throughout the history, there were none. This is a monthly chart that there were none that closed below this uptrend line. And April, when this happened, it kind of sent a clear signal to me that the bond market had transit from an uptrend over the last 30 years, maybe at a point in time that it is going to move into a downtrend. And then we saw that there was a nice retracement, and now today we're here. And let me just recap. In July, that was our study, and we're expecting a retracement up before more selling to come. So now let's go to our key number 2 here, which is then how to overcome this global bond crisis. Now, as we could see that the whole dynamic have shifted, and for the bonds market, I will have lesser cash of it, means that you could always reduce your investment and maybe turn into the other form of market, which is a derivative market. And since that the uptrend has been over and have transited to a downtrend, so basically over the last 40 years, whether it's in stocks and other markets, is always a buy on dips over the years. But since I've transited from an uptrend to a downtrend, the strategy moving forward is to have lesser of the cash. And for the derivative market, I will focus on selling into strength when opportunity arises, just like what we have discussed earlier on retracement. Now, so if you've been following over my last few videos, I also discussed about the last series that we have before I take on this inflation and interest rate series. We discuss about commodities. Now, the other market that if you are looking into buying the cash, it could be the commodities market. Yeah. So, but today, this series is going to talk about the interest rate and the inflation. Now, how to understand this? T-bonds, treasury bonds. Just a very quick note here is that um, now I think I missed out one part about drawing the uptrend line. Now, before I get into this, now we could see that I've drawn this uptrend line over the last 30 years. Now, as I'm going to switch to weekly chart, now we could see here that as it break, my whole strategy have changed from the last 30 years to buy on dips. But now moving forward, I will be looking for opportunity to sell into strength. Now we can apply the same strategy here. Remember just now the uptrend line, it was to find at least 3 significant trough. But now since that is on a downtrend, I'm going to look at to find at least 3 significant peaks. Now this is what we're going to do here. And this could be our first peak. Now, so this is a downtrend. And we could see that there were 1, 2, and a few here. 3, at least 3 significant peaks. And this is what I classify as a primary downtrend line. And there will have another secondary downtrend line. And of course, you can always refer back to the previous many other video tutorials that I've made that we've discussed in great depth about primary and secondary downtrend line. And this will be my secondary downtrend line. And what I'm seeing here for the bonds is that moving forward is this. Now I'll try to get this right. Let me try to find something that I kind of like it. Let me just try to find it. I think it's this one. Now moving forward, my projection for bonds is that it may have a resistance at the secondary downtrend line, and from there it may move down. Now, if it's going to break this secondary downtrend line, it may continue to move up, and then there will be still resistance. And before it start to make its way down. Now, I will just get better with this over time. So, and that's how it works here. Now, let me just go back to the monthly chart. And now, how are you going to trade the bonds? Like what I said earlier, we just have to switch the way we know all this while over the last few decades. Instead of buying on dips, the whole thing just reverse. It should be selling into strength. So derivative market is one of the market that you should not ignore. Now, how to understand about the T-bonds basically very quickly is that every 1 full point is represented by a fraction of 32 and is equal to 31.25 US dollars that you could see. It looks a bit complicated, but I'll try to make it as easy as possible. It means that every 32 over 32, it is 1 full point. So, and I'm going to take 32 times 31.25 US dollars means that 1 full point is equal to 1,000 US dollars. It means that if I'm going to short at 123 in the UST bonds, futures, and if going to travel down to 122, that's 1 full points, and the profit is 1,000 US dollars. This is how it works. And of course, on the wrong side, my loss, it will be 1,000 US dollars as well. Now you can refer to the following comments for more details and also my past video tutorials and its links on how I time the different market. Now let me just move to this one, the main one, as you could appreciate a little bit more here. So now stay tuned for my next episode in this series. We will discuss more on the insight of inflation and rising interest rate. More importantly, how to use this knowledge, turning it to our advantage in these challenging times for all of us. continue to explore this topic with these related videos and registered for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.